Imagine this. You wake up one morning, check your bank account, and instead of the number you went to sleep with, it's doubled. Not because you won the lottery, not because some random uncle left you an inheritance, but because 6 months ago you made a few smart, calculated decisions with the money you already had. How would that feel? What would change in your life? Now here's the real question. What if I told you that scenario isn't a fantasy? What if the only thing standing between you and doubling your money is the fact that nobody ever sat you down and explained, step by step, exactly how to do it? That's what today's video is. No fluff, no motivational filler, no vague advice like invest in yourself or cut your coffee budget. This is the complete, tactical, real-world guide to taking whatever you have right now, whether that's $500, $5,000, or $50,000, and turning it into twice that amount. My name is Max, and let's get into it. Part 1. The EE. Mindset shift that changes everything. Before we talk about any strategy, I need to rewire the way you think about money for just a moment. Because here's the problem. Most people treat money like a finish line. They want to earn it, save it, protect it, and never touch it again. And that mindset, as safe as it feels, is exactly what keeps people from ever building real wealth. Money is not a finish line. Money is a tool. And like any tool, it only has value when you use it correctly. The wealthy don't sit on their money, they put it to work. They deploy it. They send it out into the world and expect it to come back bigger. That is the core philosophy behind every single strategy we're going to cover today. Now, the second mindset shift is this. Stop thinking about doubling your money as something that happens overnight. That kind of thinking leads people into scams, bad investments, and financial disasters. Doubling your money is a process, and depending on your strategy and your starting amount, it can take anywhere from a few months to a few years. But here's the beautiful thing. It is absolutely achievable. And once you do it the first time, you'll understand exactly how to do it again, and again, and again. Let me introduce you to one of the most powerful concepts in personal finance, the Rule of 72. This is a simple formula that tells you how long it takes to double your money at a given rate of return. You take the number 72 and divide it by your annual interest rate or return percentage. So if your money is growing at 8% per year, you divide 72 by 8 and you get 9, meaning your money doubles roughly every 9 years. At 12% per year, it doubles every 6 years. At 24% every 3 years. The higher your return, the faster the doubling. Simple, powerful, life-changing when you internalize it. So the question becomes, how do you achieve higher returns without blowing up your finances? That's exactly what we're covering right now. Part 2. The foundation. Eliminate the leaks first. Here's something most financial content creators won't tell you, because it's not exciting. Before you even think about investing, you need to stop your money from leaking. Because it doesn't matter how good your investment strategy is if you're bleeding cash every single month without realizing it. Think of your finances like a bucket. If the bucket has holes in it, pouring more water in won't help. You patch the holes first, then you fill the bucket. The leaks I'm talking about are high-interest debt, specifically credit card debt and personal loans with double-digit interest rates. If you're carrying a credit card balance at 20% interest, that's a guaranteed 20% loss on that money every single year. No investment strategy in the world consistently beats that. So paying off high-interest debt isn't just a responsible financial move. It is the single highest guaranteed return available to you. Full stop. Get rid of that debt before you invest a single dollar elsewhere. I know that's not the sexy advice, but it's the correct advice. And if you're watching this channel, you're here for what actually works. Once the high-interest debt is gone, build yourself a cash buffer. 3 to 6 months of living expenses sitting in a high-yield savings account. This is your financial foundation. It means that when life happens, because it will, you don't have to sell your investments at the wrong time to cover an emergency. This buffer protects your wealth-building engine from being disrupted. Now, and only now, are you ready to deploy your money strategically? Let's talk about how. Part 3. The investment strategies that actually double your money strategy. 1. The stock market, the proven long game. Let's start with the most well-documented, most reliable wealth-building engine in human history, the stock market. Specifically, index funds tracking the S&P 500. Over the last century, the S&P 500 has returned an average of approximately 10% per year. Some years, it's up 30%. Some years, it's down 20%. But on average, historically, 10% annually. Plug that into the rule of 72, and your money doubles roughly every 7 years. Now I know what you're thinking. 7 years feels like a long time. But here's the key. You don't invest once and wait. You invest consistently every single month, no matter what the market is doing. This strategy is called dollar cost averaging. You buy when markets are high, you buy when markets are low, and over time, the average cost of your investment balances out and leans in your favor. The power of this strategy is not just the returns, it's the compounding. When your investment earns a return, that return then earns its own return, and those earnings earn their own earnings. It's a snowball rolling down a hill, and it accelerates the longer you let it run. Open a brokerage account. Set up a recurring monthly investment into a low-cost S&P 500 index fund, something with an expense ratio below 0.2%. And then, this is the most important part, leave it alone. Don't check it every day. Don't panic sell when markets dip. Just let the machine work. Strategy 2. Real estate, physical or digital. Real estate is the asset class that has created more millionaires than arguably any other, and the reason is simple. It combines multiple streams of returns simultaneously. When you invest in property, you benefit from rental income every month, property appreciation over time, and if you've taken out a mortgage, your tenant is essentially paying down your loan for you. That's 3 separate financial benefits stacked on top of each other. Now I hear you. Max, I don't have enough to buy a property. Fair. But here's what a lot of people don't know. You don't need to buy physical property to invest in real estate. Real estate investment trusts, known as REITs, allow you to invest in real estate portfolios the same way you invest in stocks, through a brokerage account with as little as a few $100s. REITs are legally required to distribute at least 90% of their taxable income as dividends to shareholders. That means consistent passive income without owning a single property. If you do have the capital to enter physical real estate, consider the BRRRR strategy. Buy, rehabilitate, rent, refinance, repeat. You buy a distressed property below market value, renovate it, rent it out, then refinance it based on its new higher value. Pull your capital back out and use that same capital to do it again. Done correctly, this strategy allows you to recycle the same initial investment multiple times, dramatically accelerating your path to doubling your net worth. Strategy 3. Building a high-income side business. This is the fastest path to doubling your money if you're willing to put in the work, and it's the one most people overlook because it requires effort, not just capital. Let me be direct. The most explosive way to double your money is to double your income. And the most reliable way to do that in today's economy is to build a business alongside your job, something that generates revenue independent of your time in a traditional employment structure. Look at the skills you already have. Can you do something for other people, businesses, or content creators that they either can't do themselves or don't want to do themselves? Video editing, copywriting, web design, social media management, bookkeeping, photography. Language tutoring, consulting in your area of professional expertise. The list is endless. Start with one client. Deliver exceptional work. Get a testimonial. Get referred to another client. Scale from there. Reinvest every dollar you earn back into the business. Tools, education, outsourcing, until it's generating a consistent income you can then funnel directly into your investment strategies. The combination of a growing side income paired with disciplined investing is, without exaggeration, the most powerful financial combination available to ordinary people right now. It accelerates every other strategy on this list. Strategy 4. High-yield savings and bonds. The safe play. Not everyone is in a position to take on investment risk right now. Maybe you're saving for a house down payment in 18 months. Maybe you have a specific financial goal on a tight timeline. In those cases, you don't want market exposure. You want predictable, guaranteed growth. High-yield savings accounts and short-term government bonds are your answer. High-yield savings accounts at online banks currently offer interest rates significantly above what traditional banks offer. Shopping around and moving your cash savings to a high-yield account is one of the easiest financial wins you can execute today, literally in 20 minutes. Government bonds, particularly short-term treasury bills, offer another safe option. They carry essentially zero default risk and provide predictable returns. While they won't double your money quickly, in a diversified strategy, they serve as the stable, low-risk portion of your portfolio that counterbalances higher-risk, higher-reward investments. Strategy 5. Investing in yourself, the asymmetric bet. Here's the investment category that has the highest potential return and costs the least to start. Skills, your own knowledge and capabilities. Think about this mathematically. If you spend $300 on a course, a book, a mentor, or a certification that helps you earn an additional $500 per month, you've generated a 200% return on your investment in the first month alone. No stock, no real estate, no bond can reliably beat that. The skills that tend to generate the highest financial return right now fall into a few categories. Sales and negotiation, literally the ability to persuade people to give you money. Digital marketing, understanding how to acquire customers online. Financial literacy itself, understanding how money, taxes, and investments work. Technical skills, coding, data analysis, AI-related competencies. And communication, writing, speaking, storytelling. Invest aggressively in your own capability, and you automatically increase your earning potential, your business potential, and your investing capital all at once. It is the ultimate leverage. Part 4. The Wealth Acceleration Formula. Now that you understand the individual strategies, let me show you how they work together. Because the real secret to doubling your money isn't any single strategy. It's the stack. Here's how Max's Wealth Acceleration Formula works. You earn income from your job. You cut the leaks. No high-interest debt, controlled spending. You invest a fixed percentage, ideally 20 to 30% of your income, into diversified assets, index funds, REITs, maybe some bonds depending on your timeline. You build a side business that starts generating additional income within 90 days, and you reinvest every dollar from that side business back into your investment portfolio until the portfolio generates more passive income than your living expenses. That's it. That's the formula. It's not complicated, but it requires consistency, patience, and the discipline to not blow your capital on lifestyle inflation every time your income goes up. Let me show you what this looks like in real numbers. Take someone earning $4,000 per month after tax. They invest $1,000 per month into an S&P 500 index fund. They build a side business that generates $500 per month by month 6. They increase their monthly investment to $1,500. At 10% average annual return after 7 years, their portfolio is worth approximately $185,000. More than double what they would have accumulated just saving in a regular account. And that's without accounting for salary increases, business income growth, or compounding wow. Acceleration. The earlier you start, the more violent the compounding becomes. Every month you wait costs you more than the month before, because you're not just losing 1 month of contributions, you're losing 1 month of compounding on everything that follows. Part 5. The mistakes that destroy wealth. I would be doing you a disservice if I only covered what to do and ignored what destroys people's wealth. Because I've seen smart, disciplined people blow their financial progress with these exact mistakes. Mistake 1. Trying to time the market. People wait for the right moment to invest. They watch the news, analyze charts, and convince themselves they'll jump in when things look safer. Meanwhile, the market moves without them. time in the market consistently beats timing the market. Start now, invest regularly. Let time do the work. Mistake 2. Chasing high returns without understanding the risk. If someone promises you a 50% return in 6 months with no risk, that is a scam, without exception. High returns always come with high risk. Legitimate investments with extraordinary return potential, like individual stocks or startups, require deep knowledge, diversification, and risk management. Get educated before you get greedy. Mistake 3. Lifestyle inflation. Every time income goes up, spending goes up proportionally. The car gets upgraded, the apartment gets bigger, the restaurant bills increase. This is the silent wealth killer. Upgrade your lifestyle slowly and deliberately. Funnel every income increase primarily into investments first. Your future self will be grateful your current self exercised restraint. Mistake 4. Emotional investing. Markets go down. That's not a malfunction. Now, that's how markets work. When your portfolio drops 20%, the worst thing you can do is panic sell and lock in the loss. The best investors in history are not the most intelligent. They are the most emotionally disciplined. Build a strategy, automate it, and remove your emotions from the equation. Mistake 5. Not starting. This is the biggest one. Analysis paralysis. Waiting until you understand everything perfectly before investing anything. Perfect knowledge will never arrive. Start with what you have. Start with what you know. Start imperfectly. The cost of waiting compounds just as aggressively as the benefit of starting. Part 6. Your 90-day action plan. Let me leave you with something concrete. Because information without action is just entertainment. Here is your 90-day blueprint to start your money-doubling journey today. In the first 30 days, eliminate any high-interest debt if you have it, or build a clear plan to do so. Open a high-yield savings account and move your emergency fund there. Open a brokerage account and set up your first automated monthly investment into an index fund, even if it's $50. In days 31 to 60, identify your side business concept based on skills you already have. Reach out to your first potential client or customer. Enroll in one high-value course or skill development program that directly connects to your earning potential. In days 61 to 90, review your monthly budget and identify one recurring expense to redirect into investments. Secure your first side business client and generate your first external income. Increase your monthly investment contribution by at least the amount you earned from your side business. By day 90, you will have more income sources, more invested assets, and a clearer roadmap than 95% of people around you. That's not motivation speak. That's the natural outcome of executing a structured plan for 3 months. Here's the truth that I want to leave you with. Doubling your money is not a lucky event. It's not a one-time act of genius. It's the predictable outcome of making smart, consistent decisions over time with the money you already have. The strategies exist. The tools are accessible. The information is in front of you right now. The only variable is you and what you choose to do in the next 24 hours. So here's my challenge to you. Take one action from this video today, not tomorrow, not after you've watched 3 more finance videos and feel ready. Today, open that account, pay off that debt, research that side business idea, send that first email to a potential client. Wealth is built in the moments when you choose action over hesitation. You now have the complete guide. The rest is entirely up to you. If this video gave you value, drop a like. It genuinely helps the channel reach more people who need this information. Subscribe if you're committed to leveling up your finances because we go deep on this stuff every single week. And comment below and tell me, which strategy are you starting with first? I read every single comment and I want to know. See you in the next one.